Markets unfazed by FOMC minutes. Focus shifts to Jackson Hole. Asia markets largely declined on Wednesday after U.S. indexes pulled back amid recession fears. Japan's Nikkei 225 dropped 0.28% to 20,618.57. In South Korea, the Kospi Index erased losses to trade 0.22% higher at 1,964.65. Hong Kong's Hang Seng Index rose about 0.2%. Australia's ASX 200 declined nearly 1% as the country's Big Four banks saw steep losses. In particular, ANZ shares were down 1.16%, Commonwealth Bank dropped 0.14%, and Westpac was down 1.82%, and the National Australia Bank fell 0.69%. In part, Italy's mounting political crisis caused a dent in investor sentiment after the Prime Minister Giuseppe Conte announced his intention to resign, as he was under pressure since Matteo Salvini called for a snap election. By the way, the sentiment in Europe was positive. European stocks closed higher on Wednesday as Donald Trump suggested he was weighing measures to boost the world's largest economy. Investors also awaited minutes from the meeting of the U.S. Federal Reserve. The Pan-European Stock 600 closed provisionally up over 1.1%, autos leading gains with a 1.7% jump. Despite the rising political uncertainty in Italy, where Prime Minister Giuseppe Conte resigned, which kick-started consultations between President Sergio Mattarella and party leaders, India's FTSE MIB index shrugged off this uncertainty and jumped nearly 2%. Meanwhile, Federal Reserve meeting minutes showed that the officials who voted to lower interest rates last month agreed that the move shouldn't be viewed as an indication that there is a preset course for future cuts, and policymakers viewed the move as a mid-cycle adjustment. Also, the document showed that most participants saw the quarter-point cut as a part of a recalibration of the stance of the policy, or mid-cycle adjustment, in response to the changing conditions. The minutes noted a couple of members wanted a 50 basis point cut, based primarily on weak inflation readings. At the same time, several sought no move considering that risks had diminished since the June meeting. The market reaction to the release was subdued in general, as minutes were assessed as neutral. Nevertheless, after the Fed minutes showed that the central bank wanted to remain flexible in implementing policy changes, U.S. stocks rose and finished higher. The Dow Jones Industrial Average rose 240.29 points, or 0.9%, to 26,202.73. The S&P 500 index climbed 23.92 points, or 0.8%, to 2,924.43, while the Nasdaq Composite Index climbed 71.65 points, or 0.9%, to 8,020.21. Meanwhile, Donald Trump on Wednesday backtracked on a comment that he made about fiscal stimulus, saying that he no longer thought cutting payroll taxes was a good idea. On the data front, the National Association of Realtors reported that U.S. existing home sales rose by 2.5% to an annual rate of 5.42 million in July. At the same time, lack of clear dovish hints on the Federal Reserve lifted the greenback across the board. The Euro-USD failed to break above 1.11 once again and remains under pressure. The pound sterling USD barely held above the 1.21 handle, a breakdown of which will lead to a more aggressive selling pressure. In commodities, Brent crude briefly humped over $61 but failed to confirm a break and retreated below the $60 figure, in part due to a stronger dollar and lingering recession fears. Meanwhile, the EIA report showed that the U.S. crude oil inventories declined 2.7 million barrels last week. At 437.8 million barrels, U.S. crude oil inventories were about 2% above the 5-year average for this time of year. Now markets shift focus to the upcoming PMI data and the Jackson Hole Symposium, where the Federal Reserve Chairman Jerome Powell is set to deliver his annual speech on Friday and is expected to provide more clarity on the Fed's future intentions. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.